Hi, in this video, I want to talk about RSI, Relative Strength Index. This is the most popular indicator that basically all traders who are engaged in technical analysis have to deal with. Only the moving average can compete in popularity with RSI. Seriously, even beginners, even if you know anything about technical chart analysis, you've probably heard of RSI, and its popularity is due to the fact that it is quite a simple and clear indicator. Well, that is, even any beginner can expose RSI with standard settings and use its standard strategy. What does a standard RSI strategy look like? When its line reaches the lower boundary, which is called oversold, we open a trade up. When the chart reaches the upper boundary, which is called overbought, we open a trade down. And, in general, if you observe the history, it is quite a working strategy, quite clear, but the problem is that it will work only on such flat charts when there is no clear trend on the chart, when the chart just fluctuates between some price levels. In such a case, the standard method of using RSI will work well, simply because RSI shows the momentum of price movement at a particular point in time. Well, that is, it shows how much the current price differs from the average for the specified period, that is, for 14 candles. If we have a sharp downward moment on the chart, and now the price is low relative to the average prices in the previous RSI, which means that the chart is oversold. In a normal situation, it will tend to the mean, meaning it will bounce upwards. Same here. We have a sharp upward movement, a sharp momentum upward. The chart is relatively expensive now, relative to average prices in the past, which means it is overbought, which means it will tend toward the average of what it was before. That's the basic logic behind RSI. But in this video, first of all, I want to tell you how this popular tool can be used not only on flat charts, but also in a trend, when there is a specific trend on the chart. Second, I'll share a few tips on how to get better results from using RSI. Let's start with how the indicator behaves in trending situations. Well, for example, we use RSI according to its standard strategy. Sell from the upper level from the overbought boundary. Buy from the oversold boundary upwards. Well, here's a situation that happens. Here we have a chart. The RSI is clearly above the overbought level. That is, we should open a trade down at this point. And there even seem to be some bounce back down here. But in reality, if you go into a trade here, you're going to take a loss, simply because if you look at the chart further out, it's gone into a long-term rising trend. And specifically in this situation, the chart will be in the overbought zone for a very long time, because the chart will keep growing, growing, and growing. And the RSI will update its readings and will be at the top all the time. Of course, the standard strategy of using RSI, at this point, we simply cannot apply, because we would have to sell. Here, sell here, sell here, sell here, sell here, at this point. And all the while, the chart is in the overbought zone. But every time we've done that, every time we've sold, we've taken a loss, because we're dealing with a trend. And during a trend, it would seem that RSI doesn't work well, but there is a good way to use it, including as a trend. Many experienced traders and experienced investors advise to use a buy line during trends. Not the lower oversold line, but the middle line. That is, if we have an upward chart, we now use the midline for upward trades. And the second rule for working in a trend is that we don't trade against the trend. That is, even if the chart goes beyond the overbought level, we do not open a trade down, because there is no point in trading against the trend. We are just waiting for the chart to come back to the average. When the chart has returned to the average, close to the average, it means that we have already seen a correction. And now may be a good moment to take advantage of the trend again and get in a good trade up. That is, to connect to the trend that is already in effect. When we see the chart reach these values, we can open a trade up and connect to the trend that is already working. For example, here now, the chart is forming a good point to enter the trend, If we were to use RSI in the trend values, at this point, we should also go up because it is close to the average, and we use it as an oversold zone and open a trade up. And as you can see, this bet worked too. The chart continued to rise. This is how you can use the RSI indicator in trending movements. Same thing with trades down. For example, we see that a downward trend is starting to form. Now the same situation will be down. That is, the chart will be in the oversold zone for a long time, but we will not open trades in the opposite direction. First, because we don't trade against the trend, we only trade on the trend. And in this case, we will use the middle line as an overbought zone. And from the middle line, we will open trades in the opposite direction. Here, for example, the chart has again reached almost the middle line, and from here, we open a trade in the opposite direction. That is, once again, let's go through everything. If the chart is flat and there is no clear trend, like, for example, in fact, even this can be considered as a trend. Here, of course, a trend begins to form, but in general, it can be interpreted as a flat movement, more or less, without a clear trend. Then we use the overbought zone for selling, the lower oversold zone for buying. But if we see a clear trend on the chart, a clear, pronounced trend, then firstly, we do not trade against it. And secondly, we use the middle line, the rebound from the middle line, as an additional chance to enter the already active trend. The second important tip on how to make RSI trading more profitable. As you know, any indicator has settings, and my advice is to use non-standard overbought and oversold lines, but 75 over 25 at a minimum. If you are a conservative trader in principle, you can set these overbought and oversold marks at 80 and 20. In this case, you will see. Now these marks stand higher, and some signals you will miss. This change of settings will make your trading more confident and signals more reliable. Yes, the signals will appear less often, but their quality will be better. And if you talk to any experienced trader, he will confirm to you that it is better not to enter a lot of trades. It is better to wait for a good signal, a good setup, but for it to be right perfect, for it to clearly meet the requirements, and so on. And you will still have plenty of time to trade. You have nowhere to rush, and it's better not to enter in semi-signals, but wait for a good setup that will definitely confirm this trade up or down. Speaking of making RSI signals even more reliable, you can increase the time frame. The general rule of all indicators works for RSI, that the higher the time frame, the more accurate the signals will be, the less they will be, but they will be more accurate. Conditionally, if we switch from 1 hour to 1 day, when each candlestick will show not an hour, but a day, then signals will appear on this indicator less often because there are fewer candlesticks, but their quality will be much better. Here, for example, we have almost reached the oversold zone. If the mark had been at 75, we would have used that as a signal. And consider that on higher time frames, you are trading on wider price movements. If we were to use this signal, we are from 111,000 on Bitcoin. In this case, we could sell and buy it back at 101,000. Huge movement in $10,000 just on this section of the chart. And yes, you would have to wait for a trade here because each candle is 1 day. Here this deal would have lasted 2 weeks, but it would have made a nice profit. Sometimes it is better to wait and use more accurate signals than to trade on small time frames. And speaking of time frames, there's a fourth tip here that is very useful and that I recommend everyone use, which is to test on the older time frames. It is always worth checking the signal on higher time frames to see the bigger picture and to see the movement on the chart more accurately. For example, let's take this RSI signal. There is a clear exit into the oversold zone here, and we should sell here. There is no trend as such, so we should use this trade to trade down. But being in this moment, we don't know that it will work out well. Being in this moment, we doubt. Maybe this is the beginning of a trend. Maybe we shouldn't open a trade down. How can this be verified? We switch to higher time frames to see if the RSI signal is there. For example, if we switch to the 4-hour time frame, here each candle will already be 4 hours, and here the movement, of course, is not so broad. We can see that here, the RSI has also entered the overbought zone, and from here we can sell, we can even switch one day. And there's the same signal here. Here too, the RSI chart has entered the overbought zone. When we confirm a trade on at least 3 time frames, it will be much more reliable. If we, for example, see that on the chart of 1 hour, we have a signal, but on the chart of 4 hours and 1 day, it has not yet formed, it may well be that the chart will continue to grow, will show a signal on all time frames, and only then will begin to turn around. So, as I said, it is better not to rush, better to wait for a clear confirmation. And if we see the same sell signal on the time frame of 1 hour, time frame of 4 hours, and time frame of 1 day, it is already a very strong signal, which is really worth using for your trading. So here are 4 tips that will greatly improve your RSI performance. First, don't just use the standard strategy. RSI can be used in trending movements, but in a specific way, as I have shown you, along the midline and only in the direction of the trend. And in order to get more accurate signals, first, expand the boundaries of overbought and oversold, at least to 75 by 25. And if you are a conservative trader, up to 80 by 20. Then the quality of your signals will increase. Also use time frames, and switching to older time frames to further validate your RSI signal. These tips will help you greatly improve your trading if you use this indicator.